Ladies and gentlemen, this is an urgent breaking news update. We have officially got news that the fourth US bank has just collapsed. And ladies and gentlemen, this is the biggest banking failure yet out of all the recent banking failures, and the biggest one since 2008. So exactly what bank did just fail? How did they fail? And what does this mean for us going ahead? Well, that's exactly what we're going to break down in this urgent breaking news update for you. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, look at this, everyone. US regulators seize First Republic and sell substantially all assets to who? That's right, to JP Morgan in the largest bank failure since the 2008 crisis. So the writing was on the wall. I've been trying to warn people for over a month now that First Republic is going to fail. They're going to go into FDIC receivership. They're hoping that maybe some banks will come in and buy them earlier. But no, JP Morgan, they waited for things to go to pennies on the dollar, and now they're going to be taking over all the assets. But wait till you hear what exactly is happening in this deal and who's going to pay for the losses. Newsflash, people, JP Morgan won't pay for any losses. It's going to be you and me and the taxpayers. But first, how exactly did First Republic get into this situation in the first place, and how did it fail? Well, First Republic became the subject of a government bidding war after a fight for its survival that began in March, when panic about the stability of the regional lender cascaded across the country. It tried to weather the turmoil by borrowing from the Federal Reserve and a Federal Home Loan Bank, while also taking in $30 billion in uninsured deposits from 11 of the country's largest banks. So this is why we have to be very, very worried, everyone. They borrowed money from the Federal Reserve. They borrowed money from the government. Even 11 of the biggest US banks gave them $30 billion, but it wasn't enough to stop the huge losses. And this is going to happen with other banks. Unlike they're trying to tell you that don't worry, the government will save everyone, the Fed will save everyone. No, there is going to be more bank failures. They can't bail out everybody. There's over $17 trillion worth of deposits in the US banking system, so they cannot save everyone. It will just simply cost too much money, and the FDIC is running out of money fast. Now, First Republic's situation turned more serious Monday after it disclosed a loss of more than $100 billion in deposits. The drop was greater than expected and raised new concerns about the company's chances for survival. So I think the world is starting to wake up. People are starting to know that one, their money is not safe in the bank, and two, the banks aren't giving enough interest for their money. They're only paying them 0.5%, 1%, 2%, when people could just simply go ahead and put their money in bonds and get a 3.5% or 4% return. Investors punished the stock, sending it down nearly 50% in one day and nearly 30% on Wednesday, and on Thursday it rose nearly 9% before plunging again Friday by 43%. And we'll have a look at how it's going right now, everybody. In the pre-market, we can see here it has fallen 34%. So it's going to be another very bloody day for First Republic, and looking like its shares may fall below $2. But let's go back to this breaking news on what is happening with First Republic now. So regulators seized First Republic early on Monday and sold the bulk of the bank's operations to JP Morgan Chase, JPM, in the largest bank failure since 2008 financial crisis. So JP Morgan's, the nation's largest bank, agreed to assume $173 billion in assets, $30 billion in securities, and all of First Republic's $92 billion in deposits. So this is absolutely crazy, everyone. What we're now seeing is the US largest bank just get even bigger, and they've pretty much waited for First Republic to fail so they can go in and take all their good assets, but wait till you see what's going to happen to all the bad assets. The Federal Deposit Insurance Corporation sweetened the deal by agreeing to share losses on certain residential and commercial loans, which I'm going to do another video on the commercial real estate sector. It is getting absolutely hammered, and this is going to cause more bank failures, giving JP Morgan some protections if the assets go bad. Now, people, this is absolutely outrageous. We're seeing right now, this is what you call fascism, everybody. The government's working hand in hand with these biggest institutions, the biggest bank in the US, they're getting taxpayers' money to cover some of these losses. That's right, your hard-earned taxpayer money is going to make JP Morgan and Jamie Dimon even richer. With the way equality is getting worse and worse, with the poor and the middle class getting absolutely decimated, this is only going to make the wealth gap accelerate and accelerate for the worse. And where are the politicians debating this? Should the FDIC cover JP Morgan's losses? I think they're doing pretty good right now. I don't think they need a handout from the government, but of course these banks can't get enough. And again, listen to how big this fall has been. The fall of 229 billion First Republic makes it the biggest casualty yet of the banking system turmoil that began in March. That's right, larger than Silicon Valley Bank or Signature Bank. Seattle's Washington Mutual Fund, which went under with 307 billion assets in September 2008, is still the largest bank failure in US history. Well, people, this is only the beginning. This banking crisis just started in March. What happened over 2008 was there was hundreds of banks failing every single year, and it went on for around 4 or 5 years. So if you think this is the worst of it and it's all over, no, people, this is just the beginning, and we're going to see even bigger banks fail, and it's going to make 2008 look like child's play. Now, again, this is going to be more and more of a burden for the FDIC, and they're starting to run out of cash. The seizure adds more of a burden to the FDIC's deposit insurance fund, used to absorb losses when banks go down. The FDIC estimates the First Republic failure will cost it $13 billion on top of more than $22 billion from the two other failures in March. So these bills are definitely racking up fast. And did you know FDIC only actually has enough funds to cover just 1.5% of the total US banking system? They only have around 130 or 150 billion dollars cash, not nearly enough to cover the huge losses that we're going to be facing. And I hope the US government isn't thinking about like what it did in 2008 by giving the biggest US bank $700 billion while they all got big pay rises, and then the taxpayers had to foot the bill. And we've seen the standard of living has only declined since then. So some of the banks that came to First Republic's aid in March with 30 billion in uninsured deposits, including 5 billion from JP Morgan, they were reluctant last week to provide a second rescue on their own, fearing the First Republic would be seized anyway. The deposits assumed by JP Morgan included 30 billion, which will now be repaid to the 10 other banks that provided them. The deal to buy First Republic places CEO Jamie Dimon at the center of a national banking crisis for the second time in 15 years, and further solidifies his status as a rescuer of weak institutions. So everyone, Jamie Dimon, he's a real hero, coming in there to help the little guy out and take all their assets for pennies on the dollar. He said, "Our government invited us and others to step up, and we did. And we took their money." In 2008, Dimon acted twice to help stabilize the financial system when JP Morgan purchased New York investment bank Bear Stearns in March of that year, getting a $29 billion backstop from the federal government, and then Seattle's Washington Mutual in September of 2008. But what many people don't know is JP Morgan shouldn't be allowed to buy First Republic because it's going to make it far too big. Listen to this. First Republic's 84 branches will open as JP Morgan offices this morning. The US government likely had to make an exception in handing First Republic to JP Morgan. There is an existing rule preventing any bank from making an acquisition, providing it with more than 10% of all US deposits. JP Morgan is already above that cap. Well, we already know this current government, they don't seem to care about law and order. They don't seem to care about the rules. They can just simply, with the stroke of a pen, rewrite the rules to anything that suits them. But what this is going to mean, more central control, and we're going to see the big four US banks get even bigger, and they'll make it very, very easy for the US government and the Federal Reserve to tell these banks to do whatever agenda they want to do, otherwise they won't be getting any more free money. So everyone, I know you're thinking, well, okay, what does all this mean for you in simple terms? What this means is, everyone, this banking crisis is only getting started. First Republic has been the biggest failure yet, but I think there are going to be more failures coming. And some people are starting to think, are they letting these smaller banks fail on purpose so they can get these mega corporations to just have a few mega corporations much easier to control? And then that way, if you don't do what these mega corporations say, well, then you won't have any access to banking whatsoever. But everyone, what do you think about all of this? Let me know down below. Now, for all my law viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.